Integrated finance. I'll tell you a bit about myself first. Not really from a payments background. I was a currency broker by trade. So what that meant in my formative years was I was cold calling everybody and asking them to do currency exchange through me. I've already had one instance with Senan, who we made an introduction to each other about an hour and a half ago. And we then connected on LinkedIn, only to find I was already connected on LinkedIn because that's all I ever did for a good year. I'm sure I'm connected to some other people here that don't know me either. I apologize in advance. Anyway, so a bit about me. Was an FX broker by trade. One of the speakers mentioned they worked at World First some time ago. I worked at Currencies Direct. And about 10, 12 years ago, Currencies Direct was losing lots of business to World First because of some crazy virtual IBAN solution that I didn't know a great deal about. And so once we figured out how it worked, I realized that sounds like a good business idea, and I ended up setting up a company I'm sure none of you will have ever heard of, called SettleGo, which is now part of a banking as a service company called OpenPaid. We built that business, grew it to 500,000 of revenue a month. 500 million would be a hell of a lot better than I could do. And what we really did is we identified a trend where the problems of our business weren't matching up with the complaints of our customers. Our customers wanted access to local payments, local accounting infrastructure, local bank accounts to solve problems such as keeping the cost of making a payment low, making payroll where you're not paying £5 to £7 per person for payroll. But my engineering team were saying, well, that's all well and good, but we've got all of this painful complexity to solve that we just don't have bandwidth to go and add more banking integrations. When we exited that business, we thought, well, how do we make that problem the sole focus of what we're trying to do? And we launched a company called Integrated Finance. Really, we started this company because we identified a trend of the continued globalization of commerce, not just e-commerce, every type of commerce, and the continued localization of the needs of each of those merchants in every territory. Boiling that down to something that can make sense in a single sentence, what we're trying to build is a unified global API for issuing bank accounts. So what does it really mean? What we're trying to do is give startup financial technology companies the bandwidth to go and focus on a problem rather than worrying about the detail, the boring yawn detail of actually how to assemble a bunch of products together to make it work in a way that they can actually take a product to market. So if you think of it as a pure data play, if you're offering a financial service, the first thing you need to do is know who you're serving. So you need to gather the information about that person in a specific way. You then want to check, are you able to provide the data? Are you able to provide the service to that individual? Maybe they're underage in certain jurisdictions. Maybe they've got a bad credit history. It could be the fact that they're a terrorist or something like that. That means you simply can't deal with them. Once you've captured that data, you then want to perform some kind of a financial service. So you're pushing that data to another party. It could be the bank that you work with. It could be an acquirer. It could be an electronic money institution. So where integrated finance really works is we try to capture the data at source, transpose it in a way that it will work with every participant that you require to offer a financial service so that our customers can just focus on something like a mobile app. You'll not win a customer because you have a sexy compliance solution. You won't win a customer because you've explained the data transposition that's going to generate local dollar accounts on Currency Cloud's network, for example. But fintechs will win customers if they have engaging user experiences. And what we're really seeing is a move away from table stakes fintech products to hyper niche, hyper specialized fintech products. And you can only really do that if you're abstracting a lot of the product detail away from the entrepreneur, away from the engineer that's trying to build the experience, so that they can actually focus on the touch points that the customer has. part of that trend, I'm sure we've seen an image like this 100 times before, is broadly the disintegration of financial services from monolith to vertical stack to what I've heard termed as primitives. What are we talking about when we're talking about primitives? It's the breaking down of every aspect of a system that creates an ecosystem for a financial service. In the 70s, 80s, 90s, you could have realistically expected to get all of those financial services from one or two entities. Often it might be the same. It could be your bank. Your bank would give you a bank account, obviously. Your bank would give you a card. They would be the issuer. In some cases, that bank would be the processor. The bank would offer you currency exchange solutions. They'd have their own in-house regulatory and fraud solutions. And towards the end of the 90s, we saw a real push from consumers of those solutions to get better services elsewhere. In fact, the Financial Services Authority, now known as the Financial Conduct Authority, was really brought in to accelerate the advent of allowing participants that weren't credit institutions to play in this field. Moving forward, what we really think is it will continue to disintegrate. It will continue to fragment. There will be hyper-specialistic providers of all of the services in one area. And so you'll have probably heard of the term unbundling and rebundling of financial services. The rebundling of that will really need to be done by participants at our level. SWIFT did it for tier one banks in the 70s and 80s. Now banking as a service platforms are abstracting the complexity, making it easier for you to use each of those component banks, but it's making it 10 times harder to work with two of those banks. And what we really think is going to be an interesting play in the future is how are we going to create interoperability of all of these blocks and components so that the next generation of financial technology companies, of embedded banking companies, have the best tools that all work together in one go. So that's a lot of jargon. I appreciate that. One of the things I wanted to run through to give people a bit of an idea on what are the types of things that you can do with a technology like integrated finance or other similar plays in our space. So I thought Payrailz, Emre did a fantastic job of explaining how ledgers can be used. One of the things we do is we ensure a customer gets a unique ledger irrespective of every participant that can impact a client's balance. You've got two types of impact on a client balance. You've got notional, so that's where you're not really moving money, you're just doing a pretend debit and credit to make sure a customer can express a value to their own users. And then there's physical adjustments, so that's where you're actually moving money either from one bank to another or from one electronic money institution to another. And a lot of the complexity that arises from offering ledgers is how do you orchestrate the funds behind the scenes so that the ledger actually does what the customer is trying to do. Some examples of how our customers have used it is using our technology, they do merchant cash advance. So whatever is coming in on T+3, they'll do a notional credit, T0, and then do a physical credit 3 days later. Obviously, they're dipping into their own funds flow there, but it's a really quick and easy way for small merchants to get access to intraday T0 settlements the way larger merchants would. What else are we seeing very commonly being used? Our bank account creation API. So again, if you go back to slide 1, the key thing that integrated finance and a lot of people are focused on is just opening the bank account. If you have a customer that wants to work in a territory in the US, but is based in, say, Nepal, there should be no technological reason why that customer can't issue bank accounts there. There should be 100 regulatory reasons why that might not be the case. That's not what we're really focusing our energy on solving, but we really do believe that if you can open a bank account anywhere for any purpose, that's going to accelerate the rate of innovation that all of the participants in fintech are able to enjoy. FX API. So one of our best partners is Currency Cloud, obviously. What a lot of our customers use us for is to manage ledgers where there's a card transaction with a processor and a corresponding impact on the bank account that might be with a third-party bank or electronic money institution. With our FX API, what someone can quickly and easily do is do a currency conversion from, say, euros into dollars, so that when the end user is spending on dollars, there's no cross-currency transaction happening. Again, that now means you've got funds at two separate entities. How are you going to ensure that you're debiting the card transaction fee? How are you going to ensure you're going to get those funds across to where the dollars need to be settled for the onward payment? Or orchestration and FX APIs handle all of what is tedious and boring to the end user and the provider of that services. That's what we're taking ownership of. How are we doing? One of the other things is our pricing module. A lot of startup fintechs and larger players can get very, very, very creative with how they want to charge their customers. And 9 times out of 10, what that means is the customer is going to have to build it themselves. Some of the best charging structures in the world, Chargeify, all of that, they usually don't account for all of the nuances and edge cases that a fintech will want to charge their customer. So what we realized is there's a really pressing need to be able to automatically debit fees, move them out of the end user's account to avoid the issue of safeguarding, commingling of client money for safeguarding. A lot of young fintechs, they have a product idea. They want to move money in a number of different ways that simply would, if I use the FTX example, potentially get the entrepreneur thrown in jail. So one of the things that we do is we automate the segregation of our clients' money and the revenues that they've derived, and that works across any bank. So you're never commingling funds, and we have decision support tools. So if you've got cash at Bank A that is only offering settlement solutions and not safeguarding, we'll have a decision support feature that tells you, out of these 5 banks, you've got X working capital that cannot stay there overnight. And then we considered automating this, but that would annoy the regulators because that encourages people to not look at the safeguarding reports. But we just have a nice clean button where a customer can click, and that will automate the movement from non-safeguarded account client money to safeguarded client money. One of the values we saw here is for a young entrepreneur that's starting a company. His CFO or her CFO will have 40% more time at the end of the month to actually focus on increasing the size of the business, rather than 3 or 4 days making sure that they haven't accidentally commingled funds and they're in for an attack from the regulator any minute now. And then the last thing is our workflow engine. Ultimately, we're spinning up bank accounts all over the world, and customers have 150,000 different reasons why they want those bank accounts to be issued in the first place. And all of those reasons create consequential impact on money movement. We have a really simple workflow engine that lets the customer decide, once I've opened a bank account, here are the principles that need to be applied to that bank account that define the movement of money. The simplest example would be if you're issuing thousands of accounts for creators or artists or small businesses for collecting payments from Amazon, is you sweep it to a house account for operational efficiency so that you can net off FX flows or whatever else. But really, every entrepreneur that I've spoken to has a different idea of the way money should flow through their system. And what we're trying to enable is the mechanism and the logic for them to do it so that they can craft whatever payment experience they want. So I'll skip through this. Just a small example of the types of value that we deliver to customers. So usually it's speed for young fintechs. I think there's an unmeasured number of fintechs that never actually get live. People tend to measure the successful fintechs by how quickly they grow, but nobody's accounting for the number of fintechs that tried and failed before they ever got live. So one big thing is we help those guys get live with the partners of their choice. we'll get it delivered 3 times faster, and we do get 65% higher developer productivity. That's information from entrepreneurs because they can apply that engineering to stuff that makes it different for their niche, as opposed to applying that engineering talent to stuff that's been done 500 times, 5,000 times the world over by companies that you all work for. There's no point deploying engineering resource there. The platform is API driven and a modular platform. That means you choose the bank that you want this to work with, and you choose the components of that bank that you want to work with. It might be that for a certain account issuing, you need to work with a community bank in the United States. That community bank in the United States might not have any access to foreign exchange services. So we would say, well, pick an FX provider, we'll plug them in, and it'll automate the flow of funds between two. And then, actually, the most important thing here is it keeps the regulator happy. So many young fintechs, they'll pay 30, 40, 50,000 pounds to get a nice jazzy policy that tells a regulator, here is how we're not going to touch your customer money. And then that will gather dust on the archives of boring things that fintechs that are trying to grow need not worry about. But with our system, someone can create that policy and actually show the mechanics and the management information that impact client balances. And again, the most important thing is, doesn't matter which bank you work with here, our system will move those according to your logic, and it'll not let you commingle funds without deliberate intent. Of course, we can't stop bad actors intentionally using a system in a way that we don't want. So we are a young company, probably the youngest company here, so it's not something we hide behind. Really, the strength of our product is the partners that we've integrated into the system to allow younger fintechs access them rapidly. But where are we now? We're a single platform for our customers to build their own applications and experiences on top of. In the future, we want our customers to entirely self-serve. Right now, it's a little bit like going to a mechanics. You bring your car in, we'll jack it up, and one of our engineers will slide under and have a look at it and say, ooh, that's going to cost you. What we would love to develop is a system where a customer can bring their own application in and sit it on top of the key components that we already offer without any need to interact with our own engineers. Our system is really 2 separate products, actually. It's Core, which is like a Mambu or a Temenos for young fintechs to craft experiences on top of. And then it's IF Connect. IF Connect is really the scale aspect of our product. One of the things that we're really proud about is the fact that we can add new partners on quickly and easily without a corresponding impact to the way the core processes those transactions. Where we want to get is having all of the providers on the left giving you infinite optionality, so that as long as you have a contract with that provider, everything else will just work. How am I doing for time? Thank you. Shoot for questions.